JetBlue Airways Corp, Alaska Air Group Incorporated, and other U.S. carriers expected the post-pandemic travel boom to send ticket prices soaring this summer. Instead, they're getting battered. Bay travelers are showing an unusually strong preference for international trips, forcing domestic-focused carriers to discount prices at the same time. Many of them are facing higher costs for niceties and actual groups. They're also feeling about what. As a result, JetBlue has slashed its yearly outlook. Southwest Airlines Co. and others have signaled they're under pressure. A reversal from a few months ago when industry leaders promised high demand would endure. While domestic ticket sales may pick up again in a few months, with holidays encouraging people to take trips closer to home, it's still been a tough reality check and a sign the end of lockdown. Travel frenzy is cooling for some. If you don't cater to premium, if you can't bank on loyalty, and if you don't fly internationally, this year's third quarter is likely to disappoint. Jamie Baker, a JP Morgan Chase & Co. analyst, said in a report that a number of reasons why travelers have become especially enamored with trips abroad, in particular looser COVID-19 restrictions mean for the first time in years Americans can visit far-flung destinations without expensive tests and the threat of lengthy quarantines. The shift has been larger than the industry expected and occurred after plans to boost available seats were already in motion. That's weighed on prices. U.S. round-trip fares are down about 11% compared with 2022 and 2019, and will remain slightly below 2019 levels until the winter holidays begin, and carriers are able to boost fares as demand increases, according to booking app Hopper.com. Adding to the pressure, Frontier Group Holdings, Inc., a major discount carrier, is increasing capacity by 23% this quarter compared to a year ago. And the tougher environment was a major reason JetBlue slashed its adjusted profit outlook to between 5 cents and 40 cents a share from its earlier outlook of as much as $1. It also said it won't earn as much this quarter as analysts had estimated. Fares that were really strong through June have declined from record levels in 2022, Alaska Airlines said last week, but remain above pre-pandemic prices. It forecasts revenue this quarter will be flat to up 3%, with a midpoint below Wall Street's expectations. It's not that people aren't traveling, it's just on the domestic system. Fares have come in lower than everyone in the industry had expected. JetBlue Chief Executive Officer Rob Lee said on a call this week, JetBlue's profit warning fuels concern over U.S. travel demand. Southwest Air falls most in a year on cost. Demand concerns. Americans are losing a post-pandemic craving for air travel as Southwest shares tumbled the most in almost a year on July 27th after it warned that higher than expected costs would pressure earnings. The Dallas-based carrier this week offered a buy one, get 150% off fare deal for the first time. The 3-day sale was for travel in August and September. Spirit Airlines and Corporations, the largest deep discount carrier on Thursday, missed Wall Street's second quarter earnings expectations and said in a statement that it would generate total revenue this quarter of $1.3 billion to $1.32 billion, well below the average analyst estimate of $1.52 billion. The current setup is simply not favorable to a domestic-focused airline, Spirit CEO Ted Christie said on a call. The executive blamed a dramatic demand shift to long-haul, the international markets not served by the airline, and weather-related challenges. Adding circumstances are unlikely to change in the near future. In April, the airline had sold-out flights every day to Cancun, Mexico, in conditions in a completely different. Spirit Chief Commercial Officer Matt Klein said, demand just fell off starting in June, he told analysts. The differences between their fortunes and that of global carriers is stark. United Airlines Holdings, Inc., and Delta Airlines, Inc., each said they would earn more this quarter than analysts expected. The companies, along with American Airlines Group, Inc., all improved their full-year forecasts. Investors appear to be rewarding the global carriers as well, with United shares increasing 40% this year through Wednesday, Delta 36%, and American 25%. Alaska and JetBlue are up more modestly, while Southwest has slipped slightly, and Frontier's dropped 18%. Hayes and others have tried to soothe investor worries by suggesting the dip in demand could be temporary, though they've stopped short of promising sales will improve after summer vacation season ends. And we actually believe a lot of the demand is spill into the fall, and therefore we have not made an assumption that this environment changes before we get into the heart of winter. Frontier Chief Executive Officer Barry Biffle said Tuesday, although I do know that once we get to January, February, it's a heck of a lot better to be in Florida than it is in most parts of Europe. And Wall Street isn't betting on a rebound. Helene Becker, a TD Cowen analyst, said she was skeptical that domestic demand at JetBlue would recover sufficiently by year-end, and finally reduced her full-year adjusted earnings outlook for the carrier. Views by the airlines that demand will swing back, they ultimately prove correct. Connor Cunningham, Amelia's research analyst, said in a report. But near term, as industry capacity is set to ramp and fare sales become increasingly more common, fear on fares will only intensify.